Michael Burry just looked at SpaceX and said he wanted to bet against it. This is the man who predicted the 2008 housing crash and made a fortune doing it. But then he saw the price of the trade, and he did something nobody expected. He backed out. The Big Short legend walked away from shorting Elon Musk's rocket empire. Here's what makes this story so wild. SpaceX is now worth more than $2.8 trillion. It just blew past Amazon in market value. Retail investors are racing to buy shares like it's the next big thing. And the most famous bear on Wall Street says it's tempting to short. But even he couldn't pull the trigger. Let's rewind. Michael Burry isn't some random guy posting hot takes online. He's the investor played by Christian Bale in the movie The Big Short. In 2005, he saw the housing market was a house of cards. He bet billions against it. Everyone called him crazy. Then 2008 happened, and he was proven right in spectacular fashion. So when Burry says he wants to short something, the whole market listens. He has a track record of spotting bubbles before they pop. And right now, he's staring at one of the most expensive companies on Earth. SpaceX went public, exploded in value, and turned regular investors into believers overnight. To Burry, that's a flashing warning sign. But here's the twist that stopped him cold. Burry didn't say SpaceX was a great company that he believed in. He said the options were just too expensive. Betting against a stock isn't free. You have to pay for the privilege. And the cost of betting against SpaceX was so high, the trade didn't make sense. Think about what that means. The man who shorted the entire housing market looked at SpaceX and decided the bet was too pricey. That tells you how insane the demand for this stock has become. Everyone is so bullish that even betting against it costs a fortune. The crowd has gone manic, and the numbers prove it. The Economist just published a piece saying America's bull market has entered its manic phase. That's a strong word. Manic. It means investors aren't thinking clearly anymore. They're buying because everyone else is buying. Prices climb not because of value, but because of pure momentum. And SpaceX sits right at the center of that frenzy. Let's put the SpaceX rise in perspective. In just a matter of days, the company shot past $2.8 trillion. It overtook Amazon. It overtook Microsoft in some readings. A company that builds rockets and beams internet from space is now more valuable than the giants that built the modern internet. That's how fast this happened. And the buyers? They're not all big hedge funds. NBC News reported that retail investors are racing to buy SpaceX shares. Regular people, the kind who watch a rocket land on a YouTube clip and think, I want a piece of that. They're pouring money in, pushing the price higher day after day after day. This is exactly the kind of behavior that makes bears like Burry nervous. When everyday investors pile into a stock at record prices, history says caution is warranted. We've seen this movie before. The dot-com bubble, the meme stock craze, the crypto runs. Excitement is fun, but excitement doesn't pay the bills forever. Now here's the deeper problem. Even though Burry wanted to short SpaceX, he couldn't. And that itself is a sign of a bubble. When everyone is so confident a stock will keep rising, the cost of betting against it skyrockets. The market is basically punishing anyone who dares to doubt. That's not healthy. That's mania. Reuters reported that experts are calling this market complacent. One analyst said Wall Street faces a litany of risks. A litany. That means a long list. Fed uncertainty, geopolitical tension, sky-high valuations. And yet the indexes keep climbing. The Dow just touched a fresh record near 52,000. Everyone seems to think nothing can go wrong. But something always goes wrong eventually. That's the lesson Burry has spent his whole career trying to teach people. Markets don't crash when everyone is scared. They crash when everyone is confident. The most dangerous moment is when nobody believes a crash is possible. And right now, almost nobody does. Let's talk about why SpaceX got this big in the first place. Elon Musk built a company that does what governments used to do. It launches astronauts. It deploys thousands of internet satellites. It dreams of Mars. Investors don't just see a business. They see a future, and they're willing to pay an enormous premium for that dream. The Starlink business alone is massive. Millions of subscribers around the world now get internet beamed from low Earth orbit. That's recurring revenue, month after month. Then there's the launch business, where SpaceX dominates so completely that competitors can barely keep up. On paper, the growth story is incredible. That's the bull case. But here's the bear case, the part the hype crowd ignores. SpaceX is valued like a company that has already conquered space. It hasn't. Mars is still a dream. Profits are thin compared to the price tag. And a single bad launch, a regulatory fight, or a slowdown in Starlink growth could shake the whole story. That's what Burry was eyeing, a gap between the price and the reality. He's made his career hunting for exactly these gaps. But this time, the market wouldn't let him in cheaply. The cost of doubt was simply too high. So he stepped aside and waited. And when Burry waits, smart people pay attention. It's worth remembering that Burry has been early before. Being right about a crash and being early about a crash can feel the same in your bank account. Painful. He shorted the housing market in 2005 and had to wait years for the payoff. His investors nearly revolted. So he knows that timing is everything. That experience may be exactly why he passed this time. He doesn't want to pay a fortune to be early on a bet that could take years to play out. The expensive options would bleed him dry while he waited. Smart move or missed opportunity? We won't know until the market decides. And the market is unpredictable. Meanwhile, the rest of Wall Street is partying. Barron's pointed out that $2 trillion stocks are driving this entire rally. The gains are concentrated in a handful of giant names. When a market depends on just a few stocks to keep climbing, that's fragile. If one stumbles, the whole thing can wobble fast. There's even a new buzzword on Wall Street. People used to talk about the Magnificent Seven, the 7 huge tech stocks that power the market. Now firms are launching something called the Mangoes ETF, a new grouping of dominant names. The labels keep changing, but the concentration risk stays the same. Too much money, too few stocks. Add to that the timing. The Federal Reserve is in focus with a new chair making his debut. Investors are nervously waiting on rate decisions. Geopolitics is shifting fast with a fresh U.S.-Iran deal calming oil markets. Every one of these is a wild card, and wild cards have a way of turning a calm market into chaos overnight. So why does the Burry story matter so much? Because it captures the exact mood of this moment. Even a legendary skeptic, the guy who literally inspired a Hollywood movie about doubting markets, can't find an affordable way to express his doubt. The crowd has priced out the doubters, and that's a rare, telling signal. There's also a fascinating contradiction here. Burry says he's tempted, which means part of him believes SpaceX is overvalued. But he won't act, which means another part of him respects how dangerous it is to fight this trend. That tension is the whole story of this market. Everyone is torn between fear and greed, doubt and dreams. For regular investors watching all this, there's a real lesson buried inside. When the smartest bear on Wall Street can't afford to bet against a stock, it doesn't mean the stock is safe. It might just mean the bubble is too inflated to safely short. Those are two very different things, and the difference matters a lot. Remember, expensive options are a symptom, not a cure. They mean volatility is expected. They mean a lot of people are betting big in both directions. A stock that costs a fortune to short is a stock the market thinks could move violently, up or down, and violent moves can wipe out investors on either side. Let's not forget the human story at the center of it all. Elon Musk. Love him or hate him, he has built companies that defy expectations. Tesla, SpaceX. He's been doubted at every step, and he's burned a lot of short sellers along the way. Betting against Musk has historically been a painful trade. Burry knows that too. That history haunts every bear looking at SpaceX. The people who shorted Tesla lost billions over the years. Musk's companies have a way of climbing higher than logic suggests possible. So even if SpaceX looks overpriced, there's a real risk it just keeps soaring. That uncertainty is exactly why Burry chose to stand on the sidelines. Now zoom out to the bigger picture. The Motley Fool ran a piece asking whether a stock market crash could happen under President Trump, noting history gives investors reason to worry. Combine that warning with a manic bull market and a record-high Dow, and you've got a recipe that demands caution. Not panic, caution. Because here's the truth nobody likes to hear. Records are exciting, but records also mean prices have never been higher. The higher you climb, the farther you can fall. That doesn't mean a crash is coming tomorrow. It just means the cushion is thin. And Burry's hesitation is a quiet reminder of how thin that cushion really is. So what happens next with SpaceX? Honestly, nobody knows. The bulls say it's the future of humanity and worth every penny. The bears say it's a dream priced as a certainty. Both could be right at different times. The stock could double, or we could get back a huge chunk. That's the gamble investors are taking right now. What we do know is this. When Michael Burry, the patron saint of betting against bubbles, looks at a stock and walks away because the doubt is too expensive, the market is in a strange and fragile place. That single decision says more about today's market than any record-high headline ever could. It's a signal worth remembering. Maybe SpaceX keeps climbing and proves all the skeptics wrong again. Maybe the manic phase ends the way manic phases usually do, suddenly and painfully. Either way, the contrast is the story. A trillion-dollar rocket dream on one side. A legendary doubter who can't afford to bet against it on the other. That's modern Wall Street. So here's the question to leave you with. If even Michael Burry won't short SpaceX, what does that tell you about where this market is headed? Is the crowd brilliant, or is the crowd blind? Drop your answer in the comments below. We read them, and we want to know whether you'd buy, sell, or stay out entirely. If you found this breakdown valuable, do me one quick favor. Hit that subscribe button and ring the bell so you never miss a Money Stories video. We cover the biggest money dramas on Wall Street, the trillion-dollar shockers, and the figures shaping the future of business. Thanks for watching, and we'll see you in the next story.